Hi there everybody, it's Neil Pry here from Fxcorrelator.com and a very warm welcome. I hope everybody's well. I hope everybody is surviving the UK winter, and I'm just here to bring you a catch up on what's been happening in the market. I'm going to look at last week actually and just see what was going on through the eyes of my Fxcorrelator indicator and related indicators, the derivatives I've been building for many years. Before that, I think everybody knows who I am, where I am now. I have a home website, a very simple one, fxcorrelator.com there, and I've been around the markets for quite a lot of years, to be honest with you. If you look at my CV on that website, I've been involved in gambling since I was a kid. My father and grandfather were bookmakers back in the 1960s, and I learned a lot about business, trading, gambling, whatever you want to call back then. I then kind of got into trading accidentally, actually, as qualifying as an accountant, working on the trading floors of Shell International Trading back in the 80s, where I supported a lot of the traders there, and just got very interested in trading. I went beyond the gambling, moved into trading, and never really looked back. And after taking various breaks, I've taken a few breaks from that, whilst also being qualified accountant. I kind of returned back in the early 2000s after a bit of a break and really got involved with Forex. By that time, as everybody is aware, the home kind of laptop and IT revolution was really going on. People were getting more and more computing power from smaller and smaller machines. They were also becoming more affordable. And suddenly, instead of sitting in massive trading rooms having acres and acres of software support and hardware sitting underneath you to enable you to trade, you suddenly just needed a PC, a couple of screens, and suddenly you could trade. You also had the broker houses becoming more and more flexible, recognizing that this was a great opportunity to get people involved in trading, and it went from there. So yep, got involved with Forex and strength meters way back in the early 2000s, one of the pioneers of that kind of approach. And it's not really rocket science, it's just looking at currencies themselves as opposed to currency pairs, which makes things quite interesting and much more illuminating at times in terms of what's going on in the market. So for example, you would need 28 charts to look at the 8 major currencies. But in terms of an Fxcorrelator, you just need one chart. And so if you use that properly, using the right settings, the right kind of approach, the right processes, the right protocol, it can be very useful. So without further ado, let's have a look at the market last week and just see how this kind of approach can help. Okay, here we are. This is last week actually, guys. This is the week starting the 12th of Feb last week. This area here is Monday, and each one of these dotted line kind of separations is each day of the week. This is a fixed start Fxcorrelator. What it does is you can start it from zero at any time in the last X years, whatever you want to do. And what it does then is it trades forward. It compounds the information going forward on all the 28 pairs, and it shows you which each of these currencies, where they're moving. Are they falling, which will be going south? Are they going upwards? And this dotted white line here, horizontal line, shows you where the week started, which would have been around Sunday 11th. Okay, and up here we've got the 7 or 8 currencies there in the colors I use. So green for greenback USD, red there for sterling, blue for euro, and so on. There are hundreds and hundreds of variations out there. Some people will charge you a fortune for strength meters, claiming they have the ultimate algorithm and the ultimate truth. I don't do that. All this stuff is free. This particular one isn't free, unfortunately, due to the fact that I've worked with some other programmers to do this, so we have to share any kind of income derived from charging this, but it will be available later in the year as part of some of the courses I plan to run. But I have lots of other freebies out there that are just as powerful as this. What many of you will recognize is this. This is the infamous and famous Fxcorrelator. This is my moving average derivative of the fixed model, and all this does is it looks at the currencies up here as they're moving, and it looks at whatever period you want to choose. So this is on the hour, this is on the 20. So what this is doing is it's looking at the strength or weakness of each of the currencies against the 20 moving average. So for example, if I were to put I don't know, if I were to put a 20 moving average against the yellow yen here, that you can see was very strong last week. So if you can imagine a 20 moving average coming off of this, you'd see it trailing behind here. Yeah, you'd probably see the 20 moving up and just sitting behind this. Perhaps it bounced there, and so on. So through this period, you would expect that to be a positive, yeah, situation above its 20. And if you look down here, sure enough, you can see the yellow yen bouncing up and down against a line here. Okay, and this would represent the 20 moving average. So you can see here around this point the yen came all the way back. So up here, this would be where this price would be hitting its 20 moving average if it was moving with the trend, and then it bounced away again, and you can see here it turns over. You see here the yellow yen falling down below its 20. So around here somewhere the 20 moving average on this price would have been breached and started to fall. Now whether you choose to start selling or buying at that point, there's huge amounts of rules that if you look at look at my website, look at my forums at Trade to Win, I will give you an indication on how to use this, what moving averages to use combinations, to how to really get into this and make it work for you. But at this point on this graph today, I'm just going to talk about the week and what happened. So without further ado, let's take that out of the way again. Let's not confuse ourselves with the Fxcorrelator moving average, and let's get back to the fixed one and have a look here. So what happened? Well, generally when I'm trading a week and I'm not scalping, because obviously if I was scalping I'll be looking much faster than this, not the 1 hour. This is where I'm taking a more strategic view on the week if I were potentially going to trade the week. First thing I look for the first day, I want to see who's starting to sell, who's starting to buy. Really simple stuff. You buy strong currencies, you sell weak currencies. So I need to get these runners and riders, these 8 currencies moving, and let's see what happened. And as you can see at the start of the week, this was pretty tight. You get an idea of pippage here. I'm going to drag these guys in, just simple lines. And reading here, I mean, plus 24, minus 23, very, very tight Monday last week. I mean, that is very tight. What we're saying here is that really, apart from the CAD here that came later in the day into the late US session, nothing really got out aside of about 20 pips either side of the zero from the Sunday night opens. That's really tight, guys, really tight. So I pity anybody that was trying to trade last Monday, because it would have been tough, believe me. There was a lot of moving around there. You can see everything is really twitchy, moving. CAD did get down south, became obviously the major sell currency here later on in the day, so there was probably some pips there to be made against, but again you'd be looking to buy against any currencies that were starting to breach this 20 level. Okay, so we really want the currencies to warm up a bit more, as you can see into Tuesday. Then it got interesting. So if we kind of continue with this kind of support resistance line that I would have kind of been drawing myself anyway, watching for what happened, I'd really be interested then in seeing what currencies start to emerge below this kind of line, yeah, because this was very tight, very tight. So let's see where the action was. We came into Tuesday, and can you see, I mean, the US dollar tends not to be that volatile, to be honest, guys. It doesn't tend to trend as strongly as some of the other currencies. It tends to be a little bit of a flatliner. So to see the US dollar quite early Asian here, coming into early London, late Asian into early London, it was good to see that. Now that is a very, very strong signal for me, especially if I was scalping, because I like scalping USD pairs because you get the lowest spreads. That was a very strong signal for me to be hitting the US dollar as a sell. Big sell. I mean, it obviously flattened into the US session and into early Asian, but this was a tremendous period. So whilst it might also act for me as a potential signal to think about selling the US dollar in higher time frames, and start to buy something up here that was starting to move. Also from a scalping perspective, I could drop down the time ranges here down into the 5s, the 1s, even the 15s, and start selling whatever was up here buying. And again, I know it's obvious in hindsight, but you can see here that if we look up here, we had a strong euro, we had a strong Aussie D, but the Aussie D did weaken. very, very quickly into the London session, and we had a very, very strong and bullish yen. The yen gave its first indication that it was going to be strong Tuesday, and we talked about that already, the strong yen this week. So interestingly enough, that the best trade was the UJ sell, actually. Not one of the pairs I normally tend to move to, because I tend to find these guys can move quite a lot together, but not this week. You can see a divorce here. These guys really never got back together all week. Massive divergence, that's what we're looking for. So that was interesting. CAD selling as well. Obviously you wouldn't trade the CAD against the USD, and can someone tell me why? Have a think about that. The reason is they're both selling. If you were looking on the chart of the CAD USD, you'd see quite a lot of chop here, but why in the world would you even think about trading this pair in these circumstances? Trade anything else. Trade the CAD against anything up here. Trade the USD, but do not trade the CAD USD. Can you see how effective and useful these charts are for showing you what currencies to be avoiding, because they're too choppy and they're too correlated, positively correlated together? These two currencies positively correlated together. Okay, that's why these things can be very useful. Okay, I won't bore you too much with this. I think most people here, I mean, you're watching this, you're traders, you're pretty smart people. You'll get to see how useful this can be with a little bit of practice and looking for support resistance levels. I mean, to cut a long story short, the USD really sold through the week. I mean, a little bit choppy here. So you would have been buying the USD, potentially scalping the London market Wednesday, but then coming into the US and then into Asian. Wow, just sold and sold and sold, and we are talking serious stuff here. I mean, if you say that's around 30 pips from the start of the week, we're down to 218s, 200 pip fall. That's just on the USD. So if you're buying something up here, you're also getting the positive effect, the pippage of these guys. So we're talking easily into the 200 pip moves here, if you've really found the right perfect trade, which is never easy. There's no such thing, you know, finding the perfect trade is not right. But let's say, for example, you had managed to identify that you felt that the USD was starting to be far too overbought here, into what had been primarily a selling market on the Wednesday. Let's say that we drag that across. Let's say that around here, as a trader, a superhuman trader, you've managed to identify that you really wanted to start shorting the USD again. Obviously, you know, by about here, this price, perhaps you were doing that. I certainly would have had a good hard look here. You see this little mini support level. I would have had a good hard look here anyway, I must admit. And let's say you were looking at your cable, so the red sterling here. Red sterling starting to come up. So if you'd identified in this area, this price here, this time here, the potential to start buying sterling into US dollar, let's see what the rest of the week would have given you. And how perfect is that? How good does that look? Let me just come off here. I mean, if you could have identified this area, that says 1500. So this is actually, because this is +2 on my charts, this is around 1 p.m. on Wednesday, just before the market opened in the US. You haven't looked back, and you know, if for some reason you managed to get in the 138s and you rode it, you could have got into the 141s. That is seriously 200-300 pip move, guys. As I said, if you remember, if we drag this up again, for that move, the US dollar gave you 200 of those pips, and as you can see, sterling wasn't as aggressive as the USD falling, but the combination of those two was good enough. You also would have done well on the yen. You also would have done well buying euro as well. Interesting combo, those three. I'd certainly put euro and sterling together, but usually you'll find the yen trailing more down here. But hey, that's life. Nothing else really in the game. Obviously, again, if you could have made money buying any of these other currencies, because the US dollar is falling so fast, these guys will go up. But generally, these were the ones to buy. Okay, I'm just going to finish off looking at the Fxcorrelator basic one very quickly. So during the week, if we just use a simple moving average of a 20 on the 1 hour, where would we have been buying during the week? Well, you can see that the greenback was a big sell in the week. You see, even on a 20 moving average, and I've just highlighted it, I mean, you could have sold it Monday, you would have been selling it Tuesday, it fell back here. Don't sell it until it starts falling south again. You would have sold it Wednesday, you wouldn't have sold it all the way back. Do you remember, this is the point where I said if you were a miracle worker you would have started to identify. If you were solid and saying I want to sell USD, you see where it crossed back below the zero, you're selling USD from here. Big sell there, big sell here, the rest of it was buys. Okay, so again, it was a big selling week for the US dollar, and we saw that. So the moving average here of the 20 moving average is showing you how the USD is gradually selling. And again, these are a lot of the techniques I teach, and I've shown for free on many of my forums how to do this already. So that was the week. The week was all about selling the dollar, guys, buying anything else you could get your hands on, anything's positive. And as I said, some great moves from Wednesday. Here's a positive sterling, plenty of money here to be made, and just highlighting that here just to show you. You see around here, sterling's got positive, dollar's got negative. Look at this move up, 200 to 300 pips there, guys. It's not easy, nothing's easy in trading. Don't let anyone make you think that, but using the right systems, finding that right edge, you can make money trading. Trust me, I do, and a lot of people I know do. Not necessarily using my systems, they just find their edge and they go for it. So this is Neil Pryor, or MVP as I'm called on some sites, signing off. Please have a look at my website, please join me, subscribe to me, and I will be running some training later in the year. Sorry I'm delaying on that. I'm unfortunately again doing more trading than ebook writing, but that's what I do. I'm a trader, I don't write ebooks, so it's a bit alien to me, but I'm knuckling down, and I promise there'll be something to come later this year. Okay guys, you have a great week, and this is MVP signing off. Cheers guys, bye.